All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live stream. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon. All right, what's going on, everybody? Welcome back. We had a nice month-long hiatus. I'm going to be taking one more month, January, looking like we're going to be back in action quite often, but we're going to hammer home on the group. We're going to finish up this 2024 mentorship and ride high into 25. So if you haven't already, please like and subscribe. Over on Rumble, that's the place where I'm going to be putting most of my video content out in this upcoming year. So get a jump start on it. Get over to Rumble and follow me over there. So every month we do this. We'll go through a bunch of names, rattle off some that look great that we can really key in on from a week to week, even a day-to-day perspective, and give us a nice fat list of what we can look at and what we can trade throughout this year. So we're going to get into that. I have a running list on X. There was a post earlier on today that was, just drop your tickers. You guys can also use the live chat here. I'm not so sure I'm going to be able to get the X live chat for whatever reason. So if you're not premium on X and you want to come over to Rumble, takes 2 seconds, make an account with your Gmail, and that way you'll be able to comment in the sidebar. So if you have any suggestions, it's just hard for me to manage that and Twitter notifications, and it's just a lot going on. So preferably keep them all in one spot. For tonight, I'll give you 2. There was one post on X and then here on the live chat. So, but without any further hesitation here, let's get into it. Like I said, we have, since last November, and I encourage you guys, everybody, go back and check my November monthly prep. See how I did. We got to hold each other accountable here sometimes. And I'm just chuckling to myself because I know how it went. But go back and watch. If you get the newsletter, go back into the old newsletters and see how those performed. If you're a sub on X, go through the previous names that I had put out there for the subs, right? I have that running list in the Discord of the 20 swings. We're getting close, baby. We're almost there. We're at 15 of 20 with 2 I'm expecting to complete over the next week or so. So we'll be 17 out of 20 for our swings. We got 3 left. And really, I kind of have an idea of what our biggest slug is going to be. And I'm sure we're going to come across this one tonight, whether it's a request or something that I just ramble through. But we're on a roll, baby. We're going to keep that rolling. Okay. So as I start to share, I got one more little clip for you guys that I think you'll like, but just checking in on the Bears after November.
How's it feeling your ass, huh? How's it feeling now? Huh? That's right, Schmidt. Schmidt, we got one. I got him. Yes! Yes!
So yeah, not much has changed. Clearly, it has been a very strong year. And heading into December, will we see a Santa rally? I'm sure you're going to hear that phrase 7 million times over the next couple of weeks. And let's just take a look and see where we're at. Okay, so really, this goes back a while now, and this really dates to when we are, kind of referring to. Just once we get to an all-time high, we're missing one nice ingredient that is very important to the concepts that we use here, and that is identifying the draw on liquidity. Okay, so if we're looking at it from a monthly perspective, because during our monthly prep we do start with the monthly, and we will work our way back down. That way we can find the highest probability setups moving forward. But if we're looking at NASDAQ from the monthly, like, as for a draw, right? Anybody who's giving you a random number, oh, it's going to 25K, it's doing this. Where are you getting that information from? We've never been there. There's no resting orders at that point. So really, to give a specific number up in this area, other than that 21,340, it's kind of just a guessing game. And I would, refrain from doing that. And honestly, it would prefer not to do that. So where we're currently at, really, we're working with one number in terms of buy side liquidity. So it's not like one of our names where we have a Mara at $14 and we're projecting 34. We don't have that here because we've never been up here. We don't have any resting orders that the algorithm that drives price is going to be looking to go get. Right? It's not a clear cut draw on liquidity other than what we have right here. Okay, so all time high trading, it kind of stinks, as you've noticed. I mean, anybody who's in here for a while, you know, NASDAQ, I really haven't been trading much of it. I've been really going more towards the individual names for the reason of we really have one area of buy side that we're working with. Other than that, it's really not all that much going on. So beyond that high that we just spoke about, also you have the same thing here on ES. You have the same thing here on the Russell. You have the same thing over here on YM. The only difference between the Russell versus what we're seeing on the others is that all of the others have taken out that all-time high. And oh, I'm sorry, Russell did last month towards the end. So we're pretty clean. And by the way, this is Amanda model completion from your low up to your high. Here's your bear market discount retracement into a bullish imbalance. There's your run for highs, and there's the completion of the Amanda model. So, but with that, all-time high trading, kind of lame. That's why I've really been keying in and focusing on those individual names. And to me, they've been much more fun to play with, oftentimes due to the fact that we have a lot of targets that are much higher than what we can get and gather here on NASDAQ. Okay, so let's work our way down. We'll still do the indices and all, but moving our way over to the weekly here on NASDAQ. Okay, so last week we did gap up to start the week, closing it green, and we created a bullish volume imbalance here. Okay, one thing that I'm waiting for on NASDAQ from a weekly perspective is some sort of retracement into discount. Now, does that necessarily mean it's going to happen right now? Absolutely not. The first thing that I always wait for in terms of kind of justifying or clarifying that we are actually going to pull back in a given situation is the formation of a bearish imbalance, something that's going to indicate that we are going to go down into discount. Okay, we don't have that right now. We had it right here, and guess what? We came down into discount. Okay, let me just draw it out for you, just so you know, for anybody who might not know. Here's your previous range from your low up to your high. Here's your first, bearish imbalance. I'll turn that red in a second. First bearish imbalance forms. What is that indicating? Discount's coming. There's your discount. There's your turtle soup. There's your run through highs. There's the completion of the Mando model yet again. So until we get one of those, I'm really not looking for lower prices, to be honest. Seeing from a smaller time frame perspective, seeing a move back down into this weekly volume imbalance that we formed last week doesn't sound all that crazy. So let's keep on going. Let's go back down to the daily. What we're currently working with on the daily here, we are in the process, and there's still a lot of time here. This could absolutely negate, but if we were to, let's say, paint this candle the way it is right now and close it and create something like this, that's a daily bullish fair value gap. That would be very encouraging for the bulls to get you that ultimate run back up to that 21,340. Okay, right now at the moment, we still have a full day in order to confirm that. So nothing there as of yet. Now you can go over to something like ES, which is the S&P, for those of you who don't use futures tickers. When I get asked this sometimes, why do you look at ES? Why don't you look at SPX or SPY? For me, I would prefer to have additional information. So futures running 23 hours a day, 5 days a week. I'm going to, kind of lean on that a little bit more, just based on me getting more hours, more price action. Okay. Another question I always get, do you have extended hours on? Absolutely. Any information that I can gather is a good thing for me, and I'm going to use that. And that's why, having those extra additional hours with futures versus what you're seeing from the 8 p.m. Close and the 4 a.m. open, I have more information. Just because we're sleeping doesn't mean that other markets aren't operating, and you see that overseas when we are sleeping. So I'll take any bit of additional information that I can get. So So yeah, that's just the index overall. Again, nothing really indicating any downside coming. Now, like I said, this is grindy. It's not as fun to play, and that's why I have pivoted much more to playing these individual names as of late. And at the moment, I think that's going to be a continued theme. So that's just the index wrap up right there. I'm gonna get into the individual names because I'm craving some more. We had a few of them. Actually a bunch of them complete over the last month. So I myself also have to find some more stuff that I want to get into. We got a few right now that are almost done. We can run through those first. But before anything else, let's run through this ad real quickly. This is Rumble Premium. Okay, this sponsorship is from Rumble, one that is incredibly important to the survival of the company. When Rumble first started in 2013, they built the platform for the small creator. They didn't censor or have biases. They were fair and treated all creators equally. No one thought platforms would censor political conversations or censor opinions on COVID, but they did. Facebook admitted they fell to the pressure from the Biden and Harris campaign. Rumble did not. They held the line. They are attacked daily for giving us a voice to talk to you. They are attacked in corporate media. They are attacked by governments like France. They are attacked from brand advertisers who refuse to work with them. Corporate America is fighting to remove speech. Rumble is fighting to keep it. Rumble won't survive with brand advertisers. They don't get much of it. Watching our show on Rumble is the most they can ask from you. But if you really believe in this fight, and if you have the means, one major way you can help Rumble survive is by joining Rumble Premium. Join the community that believes in the First Amendment and believes in our human right to free speech. Rumble is offering $10 off with the promo code STUDIO when you purchase an annual subscription. Go to rumble.com/premium and use promo code STUDIO. Like I said, if you have the means and believe in the cause, now is the time to join Rumble Premium. If you don't have the means, we are just happy if you watch us here on Rumble. So Rumble also in the news. We're going to get to that one because I like that setup myself. So let's see what we got cooking now. I want to pull up over here. Let's just run through a couple of the ones that we had on my list from a couple months ago that are almost done. We'll get those out of the way quickly. So first off, let's go to my friend over here, Mara. I actually did create a little small clip on Mara that I want to show you guys really quickly, but this is really what it's been like with Mara since we kind of were talking about this being a great setup, because nothing changed. It was a great setup all the way through, but the timing of it was painful. So here it is. So yeah, you know how this ends, right? This is how they usually end with Mando model completion. Now, so if we zoom in here and we look at what we're currently working with, here's your low up to your high. You got your discount retracement. This is where the headache came into play. We got into this volume imbalance 3 times, and after the third time, we needed more liquidity, ultimately gathering that liquidity. I bet you if you had your volume bars on and you looked over here in August, September, I bet you that volume bar started to increase. I wonder why. Here's the volume, baby. Price readers chuckling. Everyone else who uses moving averages or volume is probably like, what the hell is this guy talking about? This is where the volume's coming from. So by sweeping this monthly low, there's your quote unquote volume, and there's your run. We took out that 2730 buy side liquidity, and Mando model completes 3409. And once that happens, I'm going to be extremely happy because this one is taking forever. But hopefully, I'm knocking on wood because I know Seeker right now. He's watching. He's not even going to come off and comment because he doesn't want to jinx it. But we're close. We're very close. So that is Mara. That is one who's been in the news quite a bit now. I think it's the second largest holder of Bitcoin out of all these companies, just trailing MSTR. So, and obviously Bitcoin's been big in the news over the last month or so. So that is Mara. That was one that we were just about done with now. The next one that we've been on this one for a little while as well is Soundhound. I know you might be saying, wow, he just started off a call with Mara and Soundhound. Yes, because these are ones that we've just been in for a while. Okay. So you have your low up to your high. You got your discount retracement into not only a bullish imbalance, but also a bullish mitigation block right here. There's your run. 1025 completes the Mando model here on your monthly perspective. Now, if we look to our left, and this is where things get a little tricky, because if you're in since, $4 or $5, like most of us have been, we're really happy right now. The thing is, when we take that 1025 and I look to my left and I see that there's no monthly imbalance, now I'm like, oh, you got to be kidding me. So I think I'm going to manage this one with taking the original position out of it and kind of ride the free shares, because there are no higher time frame imbalances right now from that 1814. So just one again that I'm keeping tabs on, but this one is almost completed. This is the second one, and the third one that's about to complete for us is over here, and that is AI. Another, I know, off the beaten path. I personally haven't really been messing with too many tech stocks really since we got to that all-time high on Nasdaq. It just hasn't really been favorable conditions. It's been choppy, it's been slow, and I personally would like to avoid that. And seeing as all these like small mid cap names have so much range to them, and all these setups are beautifully constructed. So, but here's your AI setup from your low up to your high. Here's your discount retracement into not only a bullish imbalance, but also a bullish breaker. Low, high, lower low, break up and through, retracement back down into your breaker. And so far so good. We took buy side last week, very similar to Mara up here at what was that number, 38.28. And ultimately the Mando model here will complete at 48.87. So again, another one that, I'm anticipating that happening relatively quickly. So I'm excited. That's 3 names coming off the board for me, and I could start looking elsewhere. Another 2 actually that we should point out really quickly were Upstart, which was an absolute monster. This is, over 200% now. But down into your discount imbalance at $25, we're currently trading at 78.79. And the crazy part about Upstart is 50% of the range isn't until 206. We do have an imbalance up here at 156, but you look left, and really this is the final imbalance that we're working with until at the very least that 155. So Upstart has a ton of range here. Another one was Affirm. Now Affirm, from your low up to your high, here's your discount retracement. Not only a bullish imbalance, but also you have your bullish breaker right here. Kaboom, see you later. And so far so good. The only difference now that we're working with between Affirm and Upstart, I know they tend to get grouped together with the whole sector, this, that, whatever, but 50% of Affirm is coming up 92.64 with a monthly bearish imbalance right overhead. It actually starts at 83.57. So that was another great one that we had take care of business over the last month. So now this is the part where I really don't have anything prepared here, and we're going to kind of go off the rip because I need to find for myself, but second largest holding of Galaxy. You ain't kidding. Yeah, Soundhound, that was great. Yeah, no, that one has been a beauty, man. It really has. But all right, let's keep rolling here. Let's see. Now I tend to start here. I might be biased. This is one that I also have and have had for a while now, but I want to check in for myself. So if we're looking at Tesla, here, let me pull this up because I think you guys will find this really interesting on Tesla. And not the interesting that gurus say when they have no idea what they're talking about and they just need to say a word just so they don't look like complete idiots. So they say, oh, that's very interesting. I don't mean it like that. Like, I just think you're going to chuckle because this is just so perfect. Okay, so here's what you got on Tesla. From your 2019 low to your high of 2021, you got your discount retracement into a bullish imbalance. Last year in 2023, we swept previous year low and made progress higher, okay, following that discount retracement. And so far, where does the Mando model complete, guys? 414.50. So fully believe price will go to 414.50 here on Tesla hopefully soon. This could take some time, unfortunately, but this is how we can kind of gauge the timing of it, right? So this is a yearly setup. Now let's go down to the monthly. Looking at it from a monthly perspective, really bullish November here for Tesla, creating yet another bullish breaker. Okay, here low, high, lower low, break up and through. We would anticipate the that sequence to act as a support level moving forward. That's at 314.67. The only thing that stinks about this is that it's a pretty big range, that breaker. Okay, just keeping that in mind. Now let's move over to the weekly time frame. Here it is. Massive, massive, massive range. Okay. Nothing just yet is really suggesting lower prices. Okay. Here's what we got from your low up to your high. There's no imbalance suggesting a discount retracement is coming just yet. So, at the moment, I'm not really looking for all that. We did end up getting into this weekly bullish breaker and lifting off from it. Thus, we have three more buy side targets, and this imbalance has been filled and even mounted. Okay, so closing above this imbalance is pretty good. Let's see if this week we get this imbalance flipping as a previous level of resistance now turns support for that run. And this really should be a low resistance liquidity run. This 384, 402, 414.50 that completes the Mando model. But there's no imbalances in between these levels. These are relative equal highs. Price should move pretty freely up through those. This is really the last chance for bears to kind of send this up a little bit. So that is Tesla, one of my favorites. So yeah, let's see. We went through Upstart, we went through Mara, we did SoundHound, we did Affirm. Okay, now this is where I'm gonna start going through my own, and then beyond that, whatever ones you guys had commented, we can look at really quickly as well. Hold on, I'm just gonna put you guys on hold for a sec. I'm gonna turn off the Discord sound because it's driving me nuts. Hold on. Oh, here I have a funny little commercial for you guys. I think you'll like it. I hope you like that. That took me a good 30 minutes to make there. All right, so let's keep on rolling here. Let me just pull up through the chat. Yeah, I figured you guys would like that. Okay, so let's do it. Let's come on over to let's do Dell. Okay, so Dell is actually a funky one because this had earnings last week. Now, this was really last stand for bears in this situation. And let me pull this from a monthly perspective first. Okay, look how perfect this is. And this happened before, and I'm going to show you a previous example of this happening, and just the reaction that we saw following. Okay, so here, let's come on, man. Here, let's zoom it in. I'm a little rusty on the Rumble here, but here it is. Your low from 2023 to your high of 2024. That is your current range, okay? Because previous, what do we have? Oh, we already had a Mando model completion. Come on, of course we did. Low, high, and this dates back to 2020. Okay, low to your high. Here's your discount retracement. Here's a bullish volume imbalance. There's your run through highs. There's the completion of the Mando model. Okay, so this is the current range that we're working with. And yes, we did get down into discount. This is a bullish volume imbalance, also overlaying a bullish fair value gap. So pretty good. Now we had one bearish level to beat, and last month we couldn't do it. Okay, we closed right back inside this bearish monthly imbalance. So I'm curious, and I want to see if this lines up with the weekly, but we do have down here at 124 a bullish volume imbalance on the monthly time frame. So maybe that's the initial move that we see to start this month. The next area would be 117.72. So let's see if those numbers line up here with what we're looking at from a weekly perspective. Come on over. Here it is. Okay. Same range, low to your high. You got your discount opportunity knock. Did you answer? If you go back to August 5th, I tweeted out a Dell chart and I said, do you believe in Michael Dell? And, if you were to get in at that point, you were up at the highs about $60. So that one was also posted in post your charts in the group. But anyways, here's where we currently sit. And looking at it from a weekly perspective, this is the second attempt we are back inside this bullish fair value gap here. I don't really love that. I do like the reaction here. We got into that bullish fair value gap and held up pretty well. Okay, this imbalance is as good as gone, and this is really the final thing that we were working with here. We did not get buy side liquidity here. That's at 150. That is what I would deem a pretty low hanging objective with relative equal highs now. Okay, so at some point or another, I do believe that's going to get tagged. But do we see that 117 or 124 first? That's the ultimate question. So let's keep on moving down in time and see if we can really tune this up and get as precise as we possibly can. Okay. Here's where we are on the daily from your low up to your high. Here's your discount retracement. There is no bullish imbalance here. So even if this were to say complete, right, from a daily perspective, this really isn't a setup that I'm looking to play. Okay. And here's why. You might say, well, you got your discount retracement. What are you talking about? I need a bullish imbalance down there or a bullish break or something. Okay. Right here, I don't like to trade off order blocks. That's not my thing. Okay. I think it's a little bit more loose in terms of where my stop loss would be placed. It's a little bit wider in terms of a range. So I do not like to really trade off of order blocks. You might find something different than me. That's perfectly fine. But I'm not a big order block trader. You can also flip this and say, well, this is an inversion fair value gap right here. And while I would agree with you, again, this is just not something that I personally have, back tested enough for me to feel comfortable using it. If this was a fair value gap, I'm all over it. Okay. But you also have this big earnings bearish fair value gap here. So if anything, I do think this is going to take time, unfortunately, to make its way up and through to ultimately get you back up into premium of that range and to ultimately complete my model somewhere down the line up there at 179. So that is Dell. All right. Let's see if there were any more that I had off the top of my. Oh, hold on. We have this one as well. See you later. And I'm going to show you guys the play off of this that I'm looking at, and I'm actually pretty interested in. So here is Rocket Lab. This is another one that you've probably seen me tweet it 100 times already, because this is probably my coolest win of the year from $3, or it was really around $4, but $4 to like $27 where we currently sit right now. That was pretty cool. And I think that's up somewhat over 500% at this moment. So, but this one was sick. But off of this and off of this strength in whatever sector they want to deem it, aerospace and defense, there was another name. Now I'm drawing a blank. Oh, there it is. ASTS. Okay. So this one is actually pretty interesting to me. Not interesting like a Furu, but interesting because this is lagging behind Rocket Lab a little bit. Okay. And you also have a low, high, lower low, break up and through, bullish breaker right here in discount of your overarching bullish range. Okay. You have a bullish fair value gap here on the monthly that was respected very nicely. Okay. So far, so good. Okay. We did have a volume imbalance on the monthly time frame. We did fill it last month, ultimately closing below it. Now, let's zoom in terms of time frame and see if we can pinpoint this and be even more precise. Okay. Here's your weekly. Okay. So from your low up to your high, you got your discount retracement. Body's held nicely. So far, so good. Okay. This is a bullish order block. I don't love those, but nonetheless. Okay. Even in terms of this smaller time frame shift in structure from your low up to your high. Whoops. We are back down into discount. Now, this is another situation where you have an inversion, little fair value gap right here, previous bearish volume imbalance, flipped and acting as support at the moment. Okay. Here's your daily. This is where I think, if I'm not mistaken, things got a little more fun here. Maybe not. Let's see. Zoom it. Okay. Here's your shift. Okay. From your low, whoops, up to, oh no, I'm sorry. I messed up. From your low up to your high. Here's your discount retracement. There's a bullish imbalance. So far, so good off of that bullish imbalance here on the daily time frame. Okay. So this is just another name I'm, scratching my chin a little bit about. Looks pretty good to me. Let's zoom in a little more. I haven't looked myself at this, but I did have a seeker. He sent me the Rocket Lab flow, which was pretty bullish. But simple to me, this is simple enough. This setup looks pretty good. I have a bullish volume imbalance here to use as the basis of my idea, and it's pretty well defined. It's not a huge risk to the downside. And also you have a couple relative equal highs up in the mix prior to that next run. So this is a name that's going to be heavily watched by myself over the next couple of weeks to start off December here. So, all right. Okay, so as we go through, if I look over on my side list and I see some of the names that I want to look at again, I will pull those up, but I will get into some of the requests that you guys have had. And we will definitely look at ARM. Let me just keep on rolling here. Do you use web or desktop? I use desktop for trading view. Before I had a nice good computer, I used the web browser, and it was okay. It was just a lot of tabs that I keep open because as you can see on my top bar, I have my big board, which is the 6 tickers that I'm looking at for the day. I have my monthly chart, my weekly chart, my daily chart, my hourly 4-hour, and then my 1, 5, and 15 minute all in one. But yeah, so we can look at CRSR for sure, and we can also look at AMD. Absolutely. Okay, so let's go to ARM first for occasion over here. All right. All right, so let's zoom out a little bit. Take a look at ARM here. So before I do anything, I always like to walk these through just to, again, kind of hammer home the concepts. But here's your low up to your high. Here's your discount retracement into a bullish imbalance. There is your run for highs, and there's a completion of the Mando model for number 1. Okay, here's your next. Okay, so now looking at it again from the monthly perspective, we have a low to a high. We got our discount retracement. Bodies held this bullish volume imbalance here in discount of the range, and so far so good. Okay, one key area that I think is important to hold on to, which so far so good, is to hold on to this previous bearish level as bullish. Okay, so you see that 132.88. Let's see if that number comes into play as we go down in smaller time frames. To me, this is important. If we don't hold on to this and we ultimately do start rejecting, this is a low resistance liquidity run to the downside. So we just have to kind of be cognizant of that. But this is an area where we can absolutely bounce from. So let's pull over here to the weekly time frame. Okay, and yeah, this is definitely an important spot to hold on to. So good find. Best RR, right? Always looking for those. But so here's ARM. Low to your high, you got your discount retracement. So far, so good. This should be red. This is a bearish imbalance that we rejected off of on first attempt. Okay, see it? There's your bearish imbalance. Okay, and this is where we currently sit inside a bullish imbalance right here. We did sweep this low, and I like this. I like when it does this and doesn't leave behind relative equal lows. So far, so good on ARM. This actually does not look bad at all. Let's come over to the daily and see if we kind of cleaned out some of these bearish levels in the mix. Okay, so the daily, this is not necessarily something I would prefer at the moment. Here, let's just do this. Okay. Where we currently stand, this is again, this is a previous bearish level. Do we flip it and turn bullish? We could. That would be fantastic. But here's the thing: it's not something that I deem as a viable, entry model. It's just not really what I use. So, if you were to look over here, actually, this is pretty good. Low, high, lower, low, break up and through, and the high of that sequence. This is really sloppy, but it's still technically holding on to it, and that's a previous bullish breaker on the daily time frame. My biggest question would be, how much leash are you giving this? Are you going to use the low of the candle that created that imbalance? That's a 9-point move. That might be a little too big for most, but that 9 points to the downside for a potential move, 9 points to the upside. See, it's 1-to-1. Does that meet the criteria for you? That's the question you kind of have to ask. Higher time frame wise, I think it looks okay, but in this short term, it's a little bit clogged in here. So I'm, I can justify it, but I don't know how tradable this is for me personally. Where in a world where I think there are better setups out there. So that is ARM, and you're going to hear me basically echo what I just said about ARM. KD, sorry, I'm going to skip ahead of you, and I'm going to AMD. We'll go back to yours, but just because we're kind of on the same theme here with, can you justify it? Yes. you can always, every single move on here you can justify, but here's the thing. How tradable is it? Is it going to give you an actual well-defined range? And will you know what your potential risk reward is prior to you even entering the trade? And that's where it gets a little tricky. Like, you can essentially trade every one of these imbalances if you have pristine risk reward / risk management. Um, you know, that is very dependent on the trader themselves. But here, I just want to show you guys, because this is very similar. Look, if you look it over at a firm, very similarly, where you have the setup is fantastic. Now, here's the thing. You have relative equal lows here. I hate that right off the bat. That's 132.27. Don't love that. To get a bounce from that level, it I don't really love that either. At that point, I think we see 121.83. So, and while we don't have any bearish imbalances overhead, we rejected the most recent one. So what is that indicating to me? It wouldn't surprise me to see price reject from this and need more liquidity in order to ultimately bust its way up and through. That would also be the third drive. So let's come on over here and we'll pull up AMD. Okay, here's your first drive. Here's your second drive. Do we see a third drive? Okay, this is a bearish order block. This is not something I would be trading short off of anyways. To me, this is more of a toss-up. But again, like, are you longing this off the order block? I mean, I'm personally not. I don't love that. We have relative equal lows down here at 132 now, and then beyond that 132, I don't really love it. I think at that point it wouldn't be crazy to see 121. That swing low down in here. Fill up that breaker, and from there you have your third drive lower, and then I think it's kaboom and see you later. And that's going to be the third completion, or the last completion for us over in Galaxy. But I'm not crazy about where it is right now. The arm, that bigger picture, like, if we're looking at this from like a yearly perspective, this is beautiful, right? We would look at this completely different as someone who's looking at it from a smaller time frame. If you pull this out, this is fantastic, right? You just had a completion. You're working on your next little range setter. This is fine. But when you look at it from um, a smaller, more condensed range, I think much more can go wrong in the smaller time frame than the bigger picture from your low to your high. You got your discount retracement for your ultimate run through highs. So that's AMD as well. Again, just one that I don't think is really, all that great of a setup at this moment if you're looking at it from a smaller time frame. Larger, bigger picture, this to me is, or how I'm viewing it, is an area of accumulation as someone who wants to have this for a long time. But that's just me. So let's see. I just wanted to kind of stay on topic with AMD and ARM and just semis in general. So let's pull over here and see what else we got. I'm going to pull up this list here on X right now. If you haven't already, please share it. Please like it. Please comment over on X. Save someone from a furu who doesn't know what they're doing. Now let's see. Where is that post? I'm just going back to get the post that bad radio here. Let's see. I had posted CLSK earlier. I posted SQ the other day. Those are two that SQ could use a couple points to the downside, and I'd be really interested. CLSK looks actually pretty good too. Let's see. Where's the post that I did? I'm just trying to pull it up right now. So drop yours below, and I know that there was a few. Okay, here. Let's see. Okay, Target was a big name on there. Okay, we'll look at Target too, but let's roll through the rest of these. Oh, cool. Okay, a few people. Oh, what's up? Yeah, okay, I see there. Truth. And SRR. Yep, I saw those on the as well. All right, let's and Perisher. We'll look at all those. Cool. All right, so let's do for KD CRSR. All right, let's do it. CRSR. All right. So, okay, monthly perspective, Corsair Gaming. Yikes. Okay, this is a little bit beat here. So following the formation of that initial range, you had your low to your high. Whoops, here. Okay, you took out this low, creating a bearish structure. Okay, so from your high down to your low, we never got to 50%. Therefore, we're going to keep this high as the range setter, and we're going to go down. Okay, now this is a good case study. If you zoom in a little bit and you look at all these little green candles that have been mixed in, notice how not one time have we formed a bullish imbalance on any of these. Okay, so until I see a bullish imbalance form, just like we were talking about over here on net, it's on this. Hold on, I don't feel like typing it again, but with Nasdaq, until I see a downside, a bearish imbalance that would suggest price is going to go into discount, it's the same thing. Just flip it. I need to see a bullish imbalance form here if I have any hopes of this. And until then, there's no hope. Okay. I don't know where the bottom is. Nobody does. Okay. And these might be relative equal lows. What is that? 562, 560. No, we took it out. Okay. So that's not bad. This is a decent start. Okay. I know we didn't form the imbalance yet, but let's just take a look. CSR. Okay. And have we formed one yet on the weekly? We have. Nope, we did not form any bullish imbalance. Or, oh my gosh, this is really small, but we did. Man, I need glasses after looking at that one. We did. Okay, so that's pretty good. There's something else that we formed here. Winner gets a prize. I'm giving you 30 seconds. 30 seconds. What's here that is pretty encouraging for the Bulls? Okay, I'm gonna pull up over here. We'll put our little soundboard on. But what is it? Whoever gets it in the chat first wins a prize, and you win
bonus points.
All right.
Bonus points.
All right, you guys are good. You guys are good. We have KD, Snaz, and Hustle there with the bullish breaker call. That is beautiful. Okay, so here's your bullish breaker. Your low, high, lower low, break up and through. We would anticipate the high of that sequence acting as a support level moving forward. There she blows. So far, so good. Okay, we actually did create a very small bullish imbalance right here off of 738. So that was not bad either. Okay. And you're working. Oh, this is a perfect fill. Very nice. So you perfectly filled what we're currently working in as a bearish weekly fair value gap. Okay. So if we were to go higher, what would be the place that we could potentially be looking, right? The next imbalance that you have on a weekly perspective is up there at $8.70. Okay. So not all the most range on this one, but not too bad. Not too bad. At least starting to show some little bit of life. Okay. But not all that much just yet. So really, this is kind of off limits for me personally until I see a monthly imbalance form. Right. What's the difference between this and say something like a Soundhound? Monthly imbalance forms. That's it. Okay. And I don't care. You might say, oh, well, you missed this whole move. Well, guess what? I'm about to get that one plus more. and with another layer of confirmation. That's fine by me. What about this one? First imbalance form. Where is it? Ding dong. See you later. So yes, that is Corsair. Let's pull up. I just got a text message on this one. We got the Mara guy. That's how I have you saved in my phone, Ryan. Mara guy. All right, TXRH. It's a great guy. You all follow him, Captain Mara on X. Why did I type this one wrong? Oh wow, TXRH. There we go. Texas Roadhouse, baby. Got some good bread over there. All right. Yeah. So for me, not really for me. I mean, if you guys want, we can go back over to the early 2000s for the little, you know what, let's do it. Let's have some fun. We're going to do the Mando models from the early 2000s here. Okay. So where did that first shift in structure occur? That's the first question you ask. Okay. First shift in structure came from this price run right here. Okay. So how do we deem a shift in structure? by taking out that high. Okay, we took out that high with what price run? From your low up to your high. Okay, you will notice that this was a grinder for a long time here. Okay, now following the formation of your first bearish imbalance, there we go. Okay, there's your retracement down into a discount bullish imbalance. There is your run for highs. Mando model complete. That one took, let's see, 2013 to 2020. That's a 7-year Mando model complete. Okay, on to your next. Okay, there's your low up to your high. Oh, no way. Wow, this sucks. Okay, well, it doesn't suck for me. It sucks for Texas Roadhouse. Here is your shift in structure. We took out these highs right here with that price run. Here's your discount retracement, and nope, we didn't get to 50%. Did we get into a bullish imbalance? Yes. Did we have a bullish breaker here? Indeed, we did. I'll show you guys where that breaker comes from in a sec. Low, high, lower low, break up and through, retracement back down into that high of the sequence. We would anticipate that acting as a support level moving forward. The breakers are so damn powerful that they often create these types of moves. And I actually have a video on that, most powerful setup in trading, and it is about the breakers. So, but that's what we're currently working with. So your range didn't set, your range isn't set, and yeah, okay. So, fortunately, there's not much here that I'm interested in due to the fact that we are well extended into premium of your current range. You know, I like them down here in discount. And until I get something like that, this is going to be off limits for me. Where do you think it's going? Well, again, I'm not going to furu this and say it's going to 344 because this is where the 7th x-axis of the wave 45 is going. I don't buy into any of that bullshit because I've never seen one actually complete and then go back and be like, oh, look, there it is. I posted this 3 months ago. Here it is now. You never see that. Okay. You see that with what I'm doing here, but you don't see it with what they're doing. That's a problem. And that's why I don't buy it. But anyways, yeah, so unfortunately, Texas Roadhouse is kind of out of my wheelhouse right now. So let's see. Rocket Lab chart looking like Galaxy members ports lately. Yeah, I mean it's been a good run. Well, a lot of them happened at a long time. So that's the thing also, right? I know a lot of these plays are going the right way and that we're all happy about that, obviously. But some of them have been a grind. I mean, if you've been in Mara with me from the beginning, that has been I'll play the video again, but this is literally what this year with Mara was. Just so you guys get the picture. I mean, this has been a long, hard-fought battle with this name. I mean, there was never a doubt, and I hope everybody who's in the group and sees me on a day-to-day basis knows and can attest for me here. There was never a doubt, but it's just annoying, right? But yeah, for a while there, a lot of these names were getting a little sticky, and it's really one thing that you can take away from this and realize is that once the indices started to slow down a little bit, you notice that a lot of these other names are picking up, right? So just worth adding and worth noting that at least. But anyways, let's see. Let's come back over to the live chat here. And do you show these ideas in Galaxy trading premium options too? Yes and no. I mean, we basically do it all, but it's not an alert group. So if you're interested in actually learning how to do this stuff, then feel free, come on over. But if you're just looking for alerts and stuff, it's just not the place for you, because you never heard anybody who's had long-term sustainability from doing this off of alerts. It doesn't work, and it's not ever going to work for anybody. I'm sorry. But yeah, if you're interested in learning how to do it, we bounce ideas off with each other. Now there's a lot of people in the group at this point. In the beginning, it was only a few that I, would listen to and kind of trust it all. But now we got a pretty long list, which is pretty cool. But let's see. So the next one that we want to look at up here is, sorry for keeping you guys waiting, but let's look at Target. This one has been heavily asked about after that earnings beatdown. So Target. All right. Big range. Okay. Big range, even on your monthly time frame here. Let's just map this out. Let's go to 2017. You guys want to do that? Okay, let's do it. From your low to your high, here's your discount retracement into a bullish imbalance. There's your run for highs. That is the completion of the first Manda model. Yes, you will learn how to use the Manda model if you're in the group. I promise you that. Low to your high, here's your discount retracement into a bullish imbalance. There's your run for highs. Manda model complete. Okay, here's your next. From your low to your high, discount retracement into a bullish imbalance. So far, so good. Okay, you got a ton of relative equal highs up there at 183.89. Now, here's the catch, okay, and here's the hard part. While I do believe that target is going to move higher, what is the timetable for this move, right? We did get into a monthly bullish imbalance off of that earnings puker, which is great. The most encouraging thing for anyone who's bullish on target is to get a move back up to 147.67 this month. You do not want to form a bearish imbalance because it just takes more time. That's all. Come on over to the weekly time frame here. Okay, the weekly formed it, but that's okay. That can take a couple of weeks to get up and through it. I'm not concerned as much with the weekly. This is the area that you got to beat. Why is that? If anybody gets this, I'll be very impressed. Here we go. More bonus points on the board here. Let's see. Let's pull it over. Well, here we go.
Bonus points.
Somebody give it to me. What is that black box right there on the screen? Go ahead. Beautiful. All right, we got a bunch there. Nice. Bearish breaker. Yes, bearish breaker. You guys are cooking. Yep, absolutely. Love to see it. So yes, so we have a high, low, higher high, break down and through. This is what is necessary to break. Now here's the thing with this, okay? Just because we have a bearish breaker, does this mean that I'm going, oh, I'm shorting this all the way down to here? Not necessarily, okay? There's a couple of things that I can throw in here right off the bat that kind of throws you off for a loop, okay? First off, what's your current structure? You're still bullish, okay? You have your low down in October of 23 up to your highs of 24. You got your discount retracement. Anytime after I get a discount retracement, I'm kind of hands off with that bearish idea. Okay, could we get another low? Sure, but is it going to be anything more than just this low that we previously made? That's the real question to ask yourself. Okay, even from this perspective here, what was the price run to take out this low right here from your high down to your low? This breaker is technically not even in discount, so this really doesn't meet any of the criteria for me to short. But this is the area to beat, in my opinion. You beat this, I think you're in good shape. You have a ton of relative equal highs up here. Your monthly, you have a ton of relative equal highs up here as well. Gets you back into that bearish level and an overarching bullish theme. That's the level to beat right now. If this fails, then okay, we sweep this low, we get deeper into discount. If you're looking at it from a shareholder perspective, or the way that I'm looking at it as a shareholder's perspective, this is just more time for me to accumulate. But that's it. So the timing of it is always going to be the most hard thing, in my opinion. It's not so much the direction, it's the timing, because sometimes these take a while, and that sucks. And managing that on a day-to-day basis is really annoying. So let's see. Yeah, pretty much every member can read price. Yeah, I mean, anybody who's been there, I would say, I don't know, any of you guys who are in the group right now, what do you think the timetable for it is, right? So I think I know it, everybody has a different amount of time that they can really like, okay, I can definitely do this by myself. But I think the first month or the first 2 weeks, you're kind of just like, what the hell is this guy talking about? The next 2 weeks, you're like, holy shit, I have like the secret sauce. And then the next month, I guess, you kind of back and forth until you really, I think you feel like it. So maybe 2 to 3 months, and I think you're really rolling, and you no longer need to follow anybody on Twitter. That's my take. If it goes lower, it could be to sweep those nasty ones at 100. Oh, yeah, that would be brutal. That would be a really deep. So 2 month and your entire trading system. Yeah, I think that's probably the sweet spot, about 2 months. Are y'all swinging shares only since large time frame options or any options? No, we play the options too. So here's the thing. Okay, we could talk about this, right? When we look at stuff from a higher time frame, that's basically having a set of bias, right? Ultimately, like where do we think price is going based on this? Okay, whatever it might be, so for me personally, I think Target's going to go to 183 eventually. Okay, how can I, cut or how do I zoom in and be a little bit more precise? That way I can trade this on a smaller time frame basis. I just go down in time. That's it. Okay. But when we look at things from the bigger picture, if we have the higher time frame bias, that's the cheat code. We can short-term option that same idea, right? You really don't need this whole big list that I have here. If you have, 5, 6 names that you feel really good about the higher time frame bias, you could trade those on a day-to-day basis. You can even short scalp those same names if you're reading price properly, right? Like, so for example, if we were to go over, let me just look at the big board and see if there was anything that was at least even worthy of noting. I mean, you could short scalp Tesla for sure down into discount of this price run if you wanted to, because the bigger picture. That's the beauty of this, right? Or for example, here's another one. This actually just completed last week. So let's look at Soundhound. This is back to back on the 4 hour. So I'll just do it over here. Hold on. But here's my point, right? We can have a focus list, right? And we can have a higher time frame picture, right? So maybe that's your shares idea. But you could also say to yourself, okay, that's long-term options too. But on a short-term basis, like how can I trade this? Can I use the same concepts over and over again? Yeah, you bet. Low to your high. Here's your discount retracement into a bullish imbalance. There's your run for highs. How long did that take? What is that? A week? I mean, a week in discount for a run, what is this, like 20% on the underlying? Your options are going well over 100%. I think somebody in the group hit Soundhound for over 100. I personally don't trade Soundhound options. I just load up on a ton of shares, but is it doable? Yeah, I think so. Here's another one. Okay, so this is a mini Mando model inside your overarching. Okay, so if you were to go down and hold on, let's zoom in. See this move right here? I bet you if you go to a 15-minute time frame, that's a 15-minute Mando model setting up for you, right? Low to your high. Here's your discount retracement. Here's your bullish imbalance right here. High of the candle, low of the candle, right here. There she goes. Goner. Mando model complete. So, and then here's your next one. This is again on the higher time frame, but low to your high, discount retracement, bullish imbalance, run for highs. So yeah, you can do this on any time frame. You could trade whatever you want. You can trade crypto. You could trade whatever. It doesn't matter. It works on whatever you want it to. But again, just to be fair, because I can show you 7 million examples of the Mando model working. The timing of it is important. How much time you're getting on your contract. You really, and this is what I think is the most beneficial takeaway from my model, is that you can have your whole entire trade mapped out before you even push a button to get into it. You could say to yourself, okay, I'm adding off of the sweep of this low right here because that's turtle soup. Okay. Are there any imbalances overhead? No. We have a clear-cut draw on liquidity. What's our draw on liquidity? Low to your high. At this point, we got our discount retracement into a bullish imbalance. Where is price likely to go? 792. Why? That's buy side. That's to complete the Mando model. Okay. How can I map this out? How could I trade this? Okay. Well, 606 is the mark I want to see broken. So at 605, I'm setting an alert for myself and I'm going to buy it here. At what point do I know I'm wrong? I got to get out. I got to take my loss. Lower the candle that created the imbalance. 576. So 576 to 605, that's like 30 cents. Is that too much for me? If that's it, this obviously is not a big example, but like sometimes you might have $4 or $5. Like, is that too much for you to take? If it is, then you go find something else. But if the risk, you can understand that risk, you can do the calculations, look at the delta on the contract, subtract it. Okay, so for each dollar move to the downside, I'm losing 50 because my delta is 50, right? Just do the math. right? And then you have an idea of how much money you could potentially lose before you even enter the trade. If it's too much, is that a trade you should take? Probably not, right? But that is the beauty. That is the beauty of this, because not only is it right more often than not, and I cannot wait to post this once we get all 20 of these swings, I'm going to be insufferable. But it will be 20 for 20. We're getting there. We're close. Okay, there's one that I know is going to take a while. It's going to get there, but it's really driving me nuts. But the rest of them are going to happen. It's just a matter of time, and that's the thing. Could you trade with that bias the whole time? Absolutely. You could have played that thing like a fiddle. But timing, how are you operating inside that trade? That's the only thing that really is independent of anything that I could show you. It's just a matter of like, what is your risk tolerance? What's your account? Like all of that stuff. Like that's a you thing, if that makes sense. You got to be able to manage that yourself, but you will with time, with time, with time. Okay, so let's keep on going. Let's see. We'll do a lot more here. Yeah, I think the way that we say it is like, yeah, you just got to like do it yourself. I think that people might just be like, oh, well, I don't think I can. I think you can. I know you can. It just takes time. That's all. It just takes time. And that's the thing. I mean, can you speed that process up? I personally think you can if you actually like put in some time to watch. We literally have the entire year. Every private class that we did this entire year is saved. It's recorded. Actually, I shouldn't say that. Sometimes I don't record to be spiteful when people aren't doing what they're supposed to be doing. But I we have countless hours in there. It's just like how quickly are you consuming the content? That's why I hate to be annoying, but I not only me resharing like, okay, man, I'm autocomplete on this. Like I don't just do that to be annoying and show it to all of you guys, but it's helpful to me. I mean, geez, when you feel like something that you're doing works like very often, how do you think you're gonna feel when you're in the moment about to take this, right? Do you know for 100% certainty that it's gonna go here? Nobody knows anything for 100% certainty, but can you feel pretty damn good about it? I do. I mean, now I do, especially. I mean, it's just with time. The more and more you see it, the more you're going to be like, oh, wow, like I really don't have any doubt about this. Think about Mara. I've been in shares of this thing since damn, what, April? I mean, I went red once on the entire thing. I mean, for a while there, it seemed like my worst trade of the year was going to be a $5 gain. But, we got it done. And what is Mara? Low to your high. Discount retracement into a bullish imbalance for a run on highs. That's all. It's just the market. That's how the market works. It's the Manda model. I hate to say it, but just how it works. All right, let's rattle through some more of these names, and then I'm going to get out of here. Let's see. Oh, I got to scroll back up. Sorry. SRR. Sorry, man. You got caught. You got the short end tonight. We got to go back up to yours right now. And I'll do yours truth as well. My bad. PRTA. Sure. Let's look at PRTA and then we'll look at gold. All right. Let's go. PRTA. Very good. Very good. Very good. So you have your low to your high. Not bad. You got your retracement. You left behind. Did we take this? Let's just confirm. That high is 79.65. We left behind relative equal highs. Yikes. Okay, this is last chance for it right here. There it is. Okay, not a bad monthly close there. Okay, so let's see. Whoops. And we'll come on over here. What is that again? PRTA. Okay, not bad. So the first things first on this name, you mitigate this, you're in business. What do I mean by mitigate? Get over that bearish level right there, and now you're talking. You take out these relative equal highs. What do you have? Low, high, lower low, break up and through. You have a bullish breaker. That's a shift in structure. This one, it's as close as it's going to be to prime as possible. You close, give me a weekly close above this, and then we're talking. So eyes, great. Higher time frame picture, pretty clear. Looks pretty good. You come on over here, we're close, man. We're close. But I personally don't like to jump in front of the moving train. I would just prefer it to prove it to me. because worst case, let's say this gets a $6 run, it's up at $22, ultimately retraces on this next bearish imbalance right here, gets it right back into the breaker. You can catch the breaker for a run up through buy side to 27. So you see how you can play these fluctuations if you have that higher time frame bias. But this one's pretty good, but this is the mark. I really want to see it mitigate a bearish level or form a bullish one. But in this case, it would form a bullish level through this if we were to mitigate it next week, right? So pretty good there. But just we're getting close. Not quite for me. GLD. Let's see GLD. Okay, so what we're currently working with. Okay, so this is Gold Trust. All right, so again, just for learning purposes, we'll do this quickly. Here's your low of 2008 to your high, which was also a Amanda model. I'm not going to do that one, but 2008 low to your high of 2011. You got your discount retracement in 2015 into a bullish imbalance. There's your run for highs. Amanda model complete. Okay, I'm telling you, it's just the market. It's how it works. Okay, here, low to your high. Here's your discount retracement bullish imbalance. Here's your little chop consolidation. There's your breakout. There's your Mano model complete. Here's your next one from your low to your high. Here's your discount retracement into a bullish imbalance. There's your run for highs. That is the completion of the Mano model. Yet again, okay, here's your next low to your high. Whoops. Discount retracement, bullish imbalance. There's your run for highs, Mano model complete. And this is what we're currently working with. Low to your high. Whoop. Okay. So can I justify this going higher? Yes. Is it something that I would trade? No. Where would I want it? I would want it in discount personally. That's how I play, right? And you might say, oh, well, a lot of these aren't in discount right now. Then you got to wait. Sorry. You're going to find one. I know you will. You will definitely find one, but I need discount. I need discounts. I can justify this moving up and going to get highs, right? Bears could not take this bullish level out in one shot. What do they need? More liquidity. Where are they going to go get more liquidity? Buy side. Okay, 257. That's just the way that you can explain that that movement in price, because every single one of these moves, I can justify every single one of them, and you can too. I know you can, but things just don't randomly happen. It's not how it works. Okay, so let's keep going here. But that's GLD. So not for me right now, but would not be shocked if that goes and takes buy side. Para, sure. Let's look at Para for Jose. Okay. Well, it looks like we've already looked at this one. But here, this one's disgusting, and I'll show you why. Low to your high. Whoops. No discount retracement on that initial run higher, so not quite range setting. There's your range setter. There's your discount retracement. Here's your bullish imbalance right here. Oh, snap. Okay, there it is. There's your run for highs. Okay, that's a completion of the Mano model on the bullish time frame. Here's where it goes wrong. Okay, right here. Okay, after taking out that high, look, it's a melter, and that's actually a shift in structure. So you have your high, whoops, down to your lows. Okay, so we did sweep those previous lows from COVID. Okay, so that's not bad until this forms or shows some sort of life. Okay, why wouldn't I want this imbalance here? Why wouldn't this be a good one? Because we had relative equal lows below. When you have relative equal lows, think of that as two pools of liquidity for the algorithm to go attack. There's your relative equal lows, right? People are thinking, oh, look, it bounced off of support, right? No, it didn't. It's going to sweep those. It's going to engage that liquidity so that price can move freely yet again. So where we currently sit, until I see some sort of life to the upside, some sort of imbalance being created, there's really nothing for me here on Paramount. Let's just see the weekly and see if you're seeing something that might be different. Oh, okay. See, time frame. Time horizon, very good. Same bad. At least this is structured. That's all I could say. At least this is structured. Okay, you have relative equal lows here, but bullish imbalance, not bad. 12-13 would complete it on a weekly perspective here. So that is a para. All right, let's just keep rolling here. And you're looking at the 4 hours. Well, yeah. So Jose, I think we just got on the same wavelength there. We could do it on the 4 hour too, but whoops, hold on. That's the daily. And My daily levels are translating onto the hourly right there. Okay, not bad. See, these relative equal lows are kind of nasty, but what you're working with right now is not half bad. Okay, low to your high, you got your discount, you got your respect for the bullish level. Whoops, there. Okay, there actually isn't any bullish imbalance to enter off of on the 4. I'm not loving that. That would need a bearish level to flip, so it would need this. And again, I personally don't trade this. Somebody in the group might say, yo, I trade these inversions like this all the time. They crush it. Fantastic. It's just not what I do. But that's what you're currently working with on para. What is para running into at the moment, actually, on the 4-hour time frame? Bearish breaker. High, low, higher high, break down and through, reach up into the bearish breaker, rejection so far. So but yeah, that's para. Okay, let's keep on rolling here. I think all we have left is my man Truth's names right now. So we got Celsius, Lucid, MU, Rivian, SMCI, Wolf. Let's roll through them. Celsius first. Okay, CELH. Okay, actually not a bad close on that monthly time frame here on Celsius. This has been a puker for a while. This is one I've been accumulating as well, just to be fair and just to uh, let you guys know. This is based on shares as well, but we have a bullish breaker here on the monthly time frame. So you have your first low, high, lower low, break up and through. We would anticipate this area acting as a support level moving forward. So far, so good. We swept those yearly lows. So far, so good. That's a nice reaction. Okay. The first imbalance that we're messing with or we're working against right now is that level right there at 36.17. The only thing that I don't love about Celsius is that it formed multiple bearish levels through this. Okay. So let me just show you. Okay. So you are working against some bearish levels. Now, if the draw on liquidity is higher, which I think it is, is that concerning to me? Honestly, no. To be honest, I think at the very least, a run up into that wouldn't be too bad. But if the draw on liquidity is higher, then I would, tend to look to the upside and just look at these bearish levels as road bumps or speed bumps. Nothing that's going to really shift structure or anything like that. So yeah, that's Celsius. Okay. Not bad at all. You and here's another thing. Celsius. Okay. No bullish imbalance on the weekly time frame. It's just not showing it just yet, right? That's the biggest thing that I wait for. Once you start to see whether an imbalance is formed or you see a bearish level get blown through, that's a good telltale sign. Okay. You have relative equal highs up there at 35.99 on Celsius. Here's Lucid. I'm just going to say this right off the bat. Lucid is a penny stock. When there are penny stocks, I tend to avoid them for the most part. And the reason for that is, to me, the necessary liquidity is not currently present on the chart in order to move it. Okay. This is why I think you see people get arrested for pumping and dumping things, because they're bringing the liquidity that is necessary to move these things. Under $5, these tend to do exactly what Lucid's doing. They don't move all that well. So with that being said, where we're currently sitting on this from a monthly perspective, it's really not showing all too much. It actually just formed yet another monthly bearish imbalance. So this name is definitely out for me until I see the formation of a bullish imbalance or a mitigation of a bearish level. That's all. And yes, you could say, well, we just swept those lows, this year's lows, and absolutely. But you know what? When they say you catch a falling knife, right? A lot of people like to say that. They think they sound smart and stuff. To me, this really isn't the falling knife. This is the falling knife. This is quicksand. These are terrible because not only are you getting killed because it's just slowly grinding down, but you are also losing out on that time aspect of it. Look how many months it took to get down to this $2 range from $6. That's terrible. That's over a year. That's 14 months of a grind, just a slow grind, beat down lower. That sucks. That's the worst one to be involved in my opinion. I'd rather that than get slapped in the face real quick. At least I can get out of that. This is painful because you think every single one of these little fluctuations in price is going to do it, and it never does. So that's like the slow dagger in your back. But yeah, Lucid is definitely not one that I'm looking at anytime soon until it could actually prove that it wants to get up and get going a little bit. MU. Let's look at MU. So this kind of falls into the same idea that I have with ARM and AMD, where the setup itself from a wider lens looks perfectly fine. When you shrink it into a smaller time frame, it gets a little sloppy. But this is what we're working with. You are discounted on your monthly time frame. Here's MU from a weekly perspective, weekly bullish imbalance. The only thing here is that you have relative equal lows right here. Okay, I don't love those. Okay, so maybe a sweep of the low, get deeper into discount for a run higher. You got a ton of relative equal highs. I actually don't hate this setup either right now. I think it needs to take this low first and then get going up to that 114 mark. But this is pretty decent in my opinion, in comparison to AMD and ARM. I think this one's probably the best of all of those. I think it's the most clear cut. I think it actually gives you an opportunity here with the bullish imbalance that you can look towards. And you also have relative equal highs where you could justify price drawing to that point because you have 1, 2, 3 pools of liquidity resting right here, leading you into a bearish imbalance. So that is Micron. I don't know if there's any earnings. I don't know if any of that is coming up on it, but that is just here's earnings December 18th, so it's with time. But this one is definitely one of the better semi names, or more clear semi names and more well defined. I think this one is what is it, like a 6-7 point downside risk for a potential decent run higher. It's decent, definitely decent, much better than the ones that we talked about earlier, I think. So Rivian, let's look at Rivian. So shout out to Snaz. Rivian, Snaz brought up Rivian a couple weeks or months ago at this point, really. See, I listened to my boy in the group, and turned out to be a pretty good one. So I think I'm up like 20% on these. I don't know how, but or maybe is it 10? Here, I'm gonna pull it up. I want to just be accurate here. But yeah, no, it was cool because Snaz brought this one up and he liked the setup where we were currently sitting. I looked at it, I did too, and but I guess thanks for the alert, Snaz. Yeah, Rivian's up 16.53% right now for me, so that's pretty good. But only concern is that we have a bearish monthly imbalance. So while ultimately I believe the draw on liquidity is higher, it's got to show me it's got to get up through this. Why did I take it? We had a bullish volume imbalance right here. So beyond anything else, I think this is going to be a speed bump, and that should be about it. But the only problem is we have another speed bump here. So the way that I'm looking at it is this is an area that I can accumulate. We do have a bunch of relative equal highs higher. This is something that I'm looking at from a far out perspective. This is not one that I'm trading options on personally, but that is Rivian. So let's keep on going. I think we got one left, right? One or two left here. SMCI and then Wolf. Okay, so let's look at SMCI. SMCI, I hate to pat us on the back, but myself, Ryan, I know there's a bunch of other people in the group who were talking about it, and we were talking about that whole bankruptcy thing as either the greatest long of all time or the quickest stop out of all time. And it worked out pretty well for those of them that ended up going along on this. Sweep relative equal lows, get down into a discount bullish imbalance. You see the alert that we had 1969. So far, so good. We got up into, hold on, this is a previous bullish level that was melted. No monthly bearish fair value gap, so that's encouraging. Let's move on to the weekly time frame here. Okay, showtime, baby. This is what I would deem a showtime imbalance. Anybody in the chat right now, if you feel that you can explain what a showtime imbalance is, that would be awesome. This is kind of like, I don't want to say a made up concept, but this is one that I kind of put together myself because it helped me just explain it to anybody else who was like, I guess, curious as to like, okay, are we bearish or are we bullish? The reason why I would call this a showtime imbalance, like lights are shining bright, is because if we shift this right here, okay, if we take out this imbalance, I'm thinking SMCI about to do the crazy. It's about to do the impossible and really turn it around. That would be the shift in structure on the weekly time frame if this gets melted. If this does not get melted, it's a whole lot more of the same. Okay, so this is like the make or break point. This is showtime. This is the exact point in order to do so. And you look at how perfectly off that 50% mark of that imbalance, price got caught dead in its tracks. Now, you do have a weekly bullish imbalance right here. So that's not bad. That's at 31.11 down to 23.66. That's about $8. It's a little pretty big. But again, if we're going to try and be precise as possible with this, is $8 risk too much for you? If it is, then go elsewhere. If it's not, then worth a look. Okay. You have relative equal highs up here as well. Gets you to 50, 61, and 49.70. Okay, but this is the level to do it. This could totally act as a speed bump and slow you down, get you back inside this bullish imbalance before price moves higher. But this could be the real shift. If we take 51, you might say, oh, you're going to be bullish at that point. Yeah, actually, I am. Low, high, lower, low, break up and through. That's a bullish breaker. Now you have a newfound bullish range and a shift in structure. That's like everybody wants to talk about confirmation. To me, that's the confirmation when you shift structure back. I don't really like to jump in front of the structure shifts, especially on something that they were talking about being bankrupt and or not bankrupt, like fudging numbers and fraudulent activity and stuff. But until I get a shift, I'm just for a name specifically like this, I'm gonna take it easy. But all right, last one. Let's do it. Wolf. Okay. Oh, wow. Looks familiar. Low, high, discount retracement, bullish imbalance. This is also a bullish breaker right here. There it is. There she goes. Mandomoto complete. Okay. Again, if you're looking down here and you say, oh, well, I don't want to buy shares of this and hold this all the way up to 404. I want to trade options on this. If you have the draw on liquidity, you can trade these smaller time frame options easily. When price retraces back down here, this is discount of this range. Also, now you have relative equal highs above, and you have still a bullish range. You have a bullish breaker right here for your next run higher. There's so many things that overlap, and that's why, because we look at something from a wide lens, and I usually do the wide lens on here when I'm trading actively myself or whether we're in live trading. I'm looking at the hourly chart and down, like I'm keying in and being much more specific. But when we look at stuff from the bigger picture, to me, if you have the draw on liquidity, if you have an idea of where price is likely to go, and you can back that up with a pretty sound fundamental thesis, to me, you really don't need anything else, honestly. And as you can see, I have no indicators. I know you're going to say, oh, there's two. These are just futures. It's just plots the new week open gap and the new day open gap. And this one just does times. So no indicators necessary for anything that we're doing here. Low, high, discount retracement, bullish imbalance, run for highs, Mandomoto complete. It's just on repeat. So, and it's really just how the market works. I hate to say it, but it is. Low, high, discount retracement, bullish imbalance right here, run for highs, Mandomoto complete. Low, and these, if it's you're seeing it doing it like this is just a smaller time frame. Low, high, discount retracement, bullish imbalance, run for highs, Mandomoto complete. Low, high, discount retracement. This one sucks. I would not trade this personally, but this is a bullish order block. I don't trade the order blocks. I trade the retracement. So if I didn't get it here, I don't want it here. But not bad. Let's just go back to the weekly and look at, the monthly, and just see what we got from a larger time scale. Okay. Not bad. I mean, if I'm not adding it here, I don't really want it here, if that makes sense. If I'm not getting it in the discount retracement into a bullish monthly imbalance, I don't want it when it's in price discovery, looking after a rejection from this bearish imbalance. So, but so yeah, let's see the chat. Let's see if anybody let me pull this up right now. I'm just gonna move it back here. Okay. I'll pull up the chat. Let's see what we got, and then we'll keep on moving here. Oh, Katie had posted something. Hey Siri, remind me in 3 years. I can't click that one right now, Katie. I'm locked into the screen, but all right, let me read this out real quick. Okay, maybe not. Let's see. Hold on. Hold on. Where are we? Oh, here it is. Okay. Do you enjoy free speech that Rumble is protecting and fighting for? Our show on Rumble is only possible thanks to our viewers supporting Rumble's platform by purchasing Rumble's products. Most of you drink coffee every day. That's why you have to try Rumble 1775 coffee. It's actually some of the best coffee, and it's the same price as the coffee you buy now, but it's way better. Rumble 1775 coffee is free from chemicals, yet rich in flavor. This is because their beans are sourced from high-altitude farms in Bolivia, hand-picked, roasted weekly at their facility in Miami, and delivered fresh to your doorstep. As believers in freedom, buying from Rumble helps fight back against woke corporations like Starbucks and Dunkin' Donuts. Join the coffee revolution and brew rebellion with Rumble's 1775 coffee. Go to 1775coffee.com, use code STUDIO, and get a free month supply of their cognitive boosting supplement, Limitless, when you buy 2 bags of their coffee. Think about it. It's a crazy deal, and the supplement is worth more than the 2 bags of coffee. Go to 1775coffee.com and try their amazing coffee today. Okay. So let's see the chat and then we'll run it through. My stance on GLD was that it swept liquidity at the top and I was playing the retracement as a bearish fair value gap formed on the weekly. Yeah, I could do SQ. I did SQ on X yesterday too, but I'll do that one too. GLD and GLD. So let's bring that up. Also, if anybody has any more questions, feel free to drop them now. We'll run through those before. Yeah, so let's just do that GLD really quick, and then I'll get to that SQ question. So what SRR just brought up was GLD on the monthly time frame had a monthly bullish imbalance. You go to the weekly here, GLD, and it has a bearish imbalance on the weekly time frame. So here's where I guess this is probably going to be the trickiest part. Okay. And in short, how do I kind of manage this? Okay. And to me, let's zoom in. If I have a higher time frame level, I pivot towards the higher time frame. So for example, gold has a bullish imbalance here on the monthly time frame. Odds are it's probably not going to slice through this in one shot. This is a month's worth of orders imbalance to the buy side here. Yes, you're right. We do have a weekly bearish level set. Okay. But could we also justify this actually moving higher on a weekly time frame as well? I mean, you can, right? You can. But and like I said, bearish imbalance formed, I would start to look down. Absolutely. But when we have a higher time frame level suggesting something differently, that's where it gets a little bit twisted. Okay. If you were to go back over here on NASDAQ, and I'll just show you an example of why I view it this way. And you look on NASDAQ, I forget exactly when it was, but I think it might have been April, maybe. Maybe it was over here. March. Yeah, March-ish. Okay. Look at what happened in March. We had the formation of a bearish fair value gap on the weekly time frame. Okay. Now here's the catch. Okay. There it is. See that? Bearish fair value gap. Now come over here and look at March. And it paints April. My bad. Paints April. But look what happens when, yes, you formed a bearish imbalance, but look, bullish monthly imbalance. There she goes. Okay. So while I would agree with you that we're getting close on gold, I don't think it's over just yet, just based on that monthly level. Okay. Let's pull up SQ for CJC over here. Or CGC, my bad. Okay. So you look at SQ from a long-term perspective here. Okay. Whoops. Low to your high. Discount retracement bullish imbalance. Run for highs. Mana model complete. From your low to your high. Come on over. Okay. We are so deep in discount. And I really actually kind of hate this. But we did have SQ on our list of swings. Now, let's pull on over here and we'll take a look and see. Okay. You put your foot in the ground right here. If we go over to the left, do we see anything that we can kind of use as like a justification tool or anything like that? And not really, right? We have a bullish order block, things that like really we don't, I personally don't like to trade. But After the formation of this bullish imbalance right here to set our range, you have your low to your high, you got your discount retracement into that bullish imbalance, and so far so good. Okay, I think you can go and engage some more liquidity prior to in this area here on SQ. I'd be a little bit on edge, but I actually do think it's going to go higher on a larger time frame basis. This month you could form a bullish imbalance here on the monthly time frame. That would be really encouraging. So let's come on over here to the weekly. And what we're currently working with, again, here's your low to your high, discount, run through highs. Okay, so the Mana model is complete. Our current range is setting up something like this. I think my alert, I moved it by accident. That's where I should have it. But you have your low up to your high. Nothing is suggesting lower yet. Okay, but I ain't trading this up here for higher prices. Even if I think it's going higher, I'm not trading it up in premium. If we get down into discount, now we're talking. Okay, so discount starts around 81.58. My eyes come to this right here, this bullish volume imbalance. That's like $75. I know it's a big drop, okay, but this would be like the first point of interest for me, as someone who's like looking to trade, say, options on this, right? Because you have a bullish breaker here too, which is also a good thing. Price could very well get to 81 and take off. So be it, right? And that's when you want to trade that in discount. Go for it. You can. How can you do it? Keep crunching time frame to make this as precise as possible. Low, high. Okay, we formed our first imbalance here on the daily time frame. This is the mark. If we get up into this level and we reject, then I fully believe that we're going to go see discount of this range, and that's it. And you'll notice 50% is a little bit different here, on SQ versus what on the daily versus what you see on the weekly. On the weekly, you see discount right at 81. Your daily range is a little different, but that gets you to 79. Okay, but that's SQ. And then again, let's see SQ. You want to be as really precise? Sure. Okay, come on over. Here's your 4-hour range. It's going to be the same as your daily. Okay, price starts to get down. Whoops, price gets down into discounted this range. Okay, what's the giveaway? Where do I think, okay, price is going to get going here? Look for a bullish imbalance to form or a bearish level to get mitigated. That's it. You get your whole plan mapped out for you there. But I think this is actually the mark. 79.34. I'm going to add my alert there for 79 because that's a breaker. Low, high, lower, low, break up and through. So if we do get down into 79, that would be dope. But that's SQ. Okay, let's see. We're running late here. No problem. Yeah, we could do M phase too and ASPI. Sure. All right, let's run through these quickly. So N phase has been pretty much a dud since it completed the MM on the weekly time frame here. We did sweep those yearly lows, which is good. I'm not seeing any imbalance here on the monthly time frame, so that kind of sucks. But you do have order blocks. This is just not. This could very well go higher. This is just not something that I like to really trade off of. So instead of N phase, if you notice, a couple of weeks ago I had mentioned TAN as the name that I'm looking at personally because this is a monthly bullish breaker with imbalances. So you see, like, N phase could totally just do what TAN is doing. It is a part of TAN, but I just think it's a little cleaner and gives you a little bit more of precise levels to trade off of versus what you're seeing here without any imbalances. But let's go down to the weekly on N phase. I actually traded N phase a couple weeks back here, and I'll show you guys where that was. Okay, this is your little first Manda model, low to your high, discount retracement, run for highs. There was a completion. Now we're working inside a bearish weekly imbalance here. Got to show me one bearish level get mitigated before I start to get excited. But we can see the odd NAM, which is the second model that I teach. It's just essentially the inverse of the Mando model. It is when you're pretty uneasy or you don't really have a clear-cut idea as to where your draw on liquidity is. You can use odd NAM, which is ultimately just an imbalance forming to get you back up into 50%, and that's at $92. But it's just to me, it's a way to trade or fade the trend when you get the smaller fluctuations, right? When you hear people say, "Oh, it's a bear market pop," right? That bear market pop is just a 50% retracement, or a bull market retracement, or what do they call them? Healthy pullbacks. That healthy pullback is just a 50% discount so you can get that Mando model cooking, because the Mando model works to the downside too. I know we haven't been able to see as much of them recently because we've been bullish for so long, but I mean, I wish I had an example here. I don't even have one at the moment, but it works to the downside too. It's the same exact idea too. Shift in market structure, retracement back up into discount of the current range. So if end phase got up into one of these bearish levels and puked over down through those lows, that would be the Mando model on end phase. So, but that's what I got on end phase. Tan looks so much cleaner. I know end phase is a part of tan, but that one just looks a lot cleaner to me. ASPI. Okay, ASPI, not bad. All right, so let's see. Monthly low to your high. You guys getting tired of me saying this yet? Because I'm very tired of it. Low, high, discount retracement, bullish imbalance, run for highs, man, I'm autocomplete. Okay. What exactly? I mean, this is pretty good too. It doesn't have all the information in the world. It's a relatively new name. We did get back down into discount. Oh, wow, this is cheap. If I were to trade this is how I would do it. I would say to myself, okay, we have a bullish price run. I don't have all the data in the world. I don't have all the information in the world. This is only a 2-year-old company in terms of public trading. How can I go about this? I have an imbalance in discount. This is literally what would the basis of my idea would be. Anything below the low that created that imbalance is no good. So 494 to 261, is that too big? If that's too big, then I can't trade it. If it's not, then so be it. Now I can bring it down into a smaller time frame and look at it from that same perspective. How can I tighten this up using the smaller time frame? Well, you have your low. Whoops, up to your high. I got to fix this. Low to your high. Okay, discount we said over here is 494. Over here, the area which I'm really interested in isn't until 398, wide 398. It's just a way for me to be more precise. If it gets down into discount here and just takes off immediately, so be it. I miss it. But I can be much more precise and tighten up my risk quite a bit by using this bullish breaker / bullish fair value gap right here. Okay. Just ways to kind of go about it. Okay, why would price reject right here before over here? Why? Bearish imbalance, bearish breaker, high, low, higher, high, breakdown and through, rejection. There it is. Okay, every single move on this chart can be justified. Just got to learn how to break it down. So I think that's all I got. Let's see. What was the point of ASPI? What I know Hustle had brought that up. No problem there, Miami conservative. Oh yeah, you said weekly breaker. Nice. Yeah, same exact thing. Cool. Bullish breaker. Looks like it formed and tested. Yeah. Yep. All right. Well, look, everybody who stuck around here for 2 hours, congratulations, you made it. Hold on, I gotta get a quick laugh. Hold on one second. Oh man. All right. That's all. So, all right. Well, tomorrow, not sure. We got a packed week of data too. I have a list of that. If you get the newsletter, it's all in there. But we have data pretty much every day this week. We have non-farm payroll, so the end of the week is pretty much going to be, it's going to be a wash. Thursday and Friday, we will do live trading Tuesday, Wednesday, Thursday. But like I said, Thursday's probably I'm not going to do anything because we have non-farm payroll on Friday. Historically, just a really choppy garbage close to the week. After non-farm payroll, it's not bad, but before it is, that Thursday usually stinks. Now, if we go to the other days, it's just a matter of like knowing what time that data is coming in. I don't care what the data actually is. It's just a matter of knowing what time it's going to happen so that I'm not caught in something that specifically a NASDAQ futures trade with multiple contracts. But try to avoid getting caught in those. So anyways, for everybody who stuck around, thank you. I will catch everybody later on. If you have any questions about anything, feel free to reach out. You're probably better off just sending it straight to me or commenting on one of the posts. I'm trying not to look into the DMs on Twitter. It's just a cesspool. It's just getting way too clogged up, and I don't really look at those every day. So if you're in the Discord and you have a question, obviously do it in the trading chat, or you can DM me directly. But that is all I got for tonight. So I will catch everybody publicly on Rumble. I'll see you guys January. I think we'll bring something back in January. But anyways, all right. I'll see everybody later.